All right. Well, hello everyone, and welcome back to our Vantage Point University channel here on our live stream. And so glad to have you all with us today. I'm really excited to share some incredibly valuable information and education with you guys today on earnings specifically. We know that we're coming right into earnings season, which always seems to be a very fun time of the markets. I guess that depends upon what you consider fun though, right? So we're going to be going through some examples together today. I'd love to hear what you guys have to say about earnings. What are your thoughts there? And how can Vantage Point help you navigate through some of the volatility that happens around earnings? Very important concept and very important to understand when earnings are coming and what to expect when they do. So let's go ahead and dive into our software today. We'll waste no time in getting started. So as you can see here in our software, we do have what we would call trends, bullish and bearish for those of you who are just now kind of seeing Vantage Point maybe for the first time. And do me a favor, if you could, before we get into any of the good stuff today, please let me know if this is the first time that you're seeing Vantage Point, because if this is the first time, I just want to make sure that everybody's on a level playing field, that you guys understand what we're looking at and how to read it yourselves and what types of technical analysis we can use to help navigate through some of the earnings plays that happen during this time of year, really, any quarter, right? So if you could do me a big favor, just type in, let me know if this is the first time that you are seeing Vantage Point. If you are a Vantage Point family member already, then welcome back, right? So we're excited to dive on in with you guys today. Thank you, Eric. Thank you, Mark. Much appreciated, guys. I see your chats coming in as well. So keep in mind too, I'm going to keep an eye on the chats as we go through the session today. I'm going to make it my goal and do my very best to answer every question that comes through. So please keep those questions coming, keep that engagement coming as well. That just helps to make our sessions even better than what I had anticipated or planned for today. And I've got some really great stuff planned today. So let's go over just some basics of Vantage Point so everybody has the hang of it. Now, it's red and green. Okay, so think green for up, red for down for those of you who are just seeing this for the very first time. And we're going to also talk about points of confirmation. Those are data points. Those are points in time where the data and the indicators are in alignment. We have confirmation, which equals confidence. So let's take a look at a few of those key points right here. So the first point of confirmation that we want you to look at is going to be that blue line crossing over the black line. Now that blue line's very powerful. It is a predictive moving average. So it has artificial intelligence, true AI built into that blue line, which calculates so many different markets behind the scenes to better understand what an asset is expected to do. In this case, we have EQX. So we're going to look at the expected trend for EQX for the next several days. That's anywhere from 1 to 3 days out. Who doesn't want a 1 to 3 day prediction on their software? So as we can see that blue line coming up above the black line, this trend turns green. Fantastic. That tells us we have a bullish trend. But not only do we have a bullish expected trend, we can look down and find additional confidence in what we call the neural index. Now, if you're not familiar with the neural index, that's okay. I'm going to explain that now. Basically, the neural index uses neural networks and again, that predictive intermarket analysis to actually forecast price action 2 days ahead of time. So if we look at the neural index and say, okay, well, what is price expected to do over the next 2 days? So see now what we have is a trend as well as price confirmation as well. See the points of confirmation. We're getting more confident as we go along the way. The next piece would be strength, and strength is a very key point to understand, especially for a swing trade, because you want strength coming into that trend so we can get a nice swing out of that move. And so if we take a look at our predictive differences, these are going to be our measures of strength within the trend. Now, you'll notice there's 3 of them. That's because they're on 3 separate time frames. And it's best to understand on a short-term basis, on a more conservative basis as well. Do we have consistent strength coming into the trend? And we can see here, boom, yes, The answer is we do. And so when we have those points of confirmation, there is an additional fourth point of confirmation. And everybody shift your eyes to the right-hand side of the screen. That's going to be that predictive trade candle. That would be a predictive range for the next day. Yes, I said predictive for the next day. Who doesn't want to know the range for the next day? Whether you're a day trader, whether you're a short-term swing trader, or maybe you're more longer swings or position holds. That can be incredibly valuable, especially for, better assessing risk or calculating stops and entry points along the way. Let me ask, who uses stops for their trades? Position management, when you enter a trade? Let me know in the chat so we can chat about that a little later in the session. All right. So gonna go ahead and jump back on into our point of confirmation. I think that we can all confirm and agree here that we have our points of confirmation all in alignment, giving us bullish signals, or basically everything's telling us that the trend is expected to go up, price action is expected to move, and we have strength behind it. Great. Now, how do we manage that trade moving forward? This is where it's kind of make or break for a lot of traders, is that position management piece. And so make it easy on yourself, right? Use the predictive data here. We can see as long as this trend stays green and price action stays above, we can have a lot of confidence to actually follow that completed trend using the predictive data. Now, when are you looking for that potential exit point? Maybe at some points of weakness when you start to see indicators lining up to the downside here, and then officially when we get that crossover to the downside as well. So again, we're looking for that alignment of green for bullish or up, the alignment of down for bearish or red in this case. So green, red, pretty simple concept, okay? So if we take a look at our next trend, we are going to evaluate some earnings here. All right, so if we assess from an earnings standpoint, all right, we can see when earnings are expected to be announced. You'll see this little earnings flag with the dollar sign. That's going to be an earnings flag. Okay, so forever reference in this training session, you'll be able to see that when we have earnings, you'll see this earnings flag showcasing here. All right, now does anyone have any specific questions about earnings? Let me take a look at the chat here for a second and we'll see how that goes. All right, let's see. Someone's learning to put stops. Okay. Well, if you're already a Vantage Point user, I hope you're using that predictive trade candle or that predictive trade range to help you out there. And also, if you are not yet a Vantage Point family member and maybe you just want some more information, or maybe you enjoy the education today, because that's really what today is about. Our live sessions here are for Vantage Point family members as well as those who maybe have never seen the software before. So either way, I really want you to take one or two things out of the session today and learn something new about the markets. Learn something new that you can apply to your own trade strategy. That is the most valuable piece of information that you will ever have, is your own education and your own knowledge. So if we can pass that along, we're definitely here to do that to, help you in your success along the way. So if you need more information on Vantage Point, just go to VantagePointForecast.com and we can certainly get you some more information on that. So who is familiar with earnings? Looks like some of you are. It definitely does predict the earnings. We're going to jump into that a little bit here in just a moment. So we do have some predictive data here in the software that can certainly help you to navigate around those earnings plays, whether it's prior to earnings or after earnings. Oh, good. I already see some ticker symbols coming in, so you guys know what's coming next. We're going to jump into some live analysis, but the first thing that I want to do is actually point out, one, that yes, we do have an earnings flag that will tell you when the earnings is coming up. Now, of course, we're looking back at this particular earnings. This is Roblox, for example, because I want you to see how this indicator works. Then we'll take a look at some other ones that have upcoming earnings or recently past earnings, so we can see how that played out here in the software. So if we take a look, that we can see this earnings flag here. And we do have some additional information that pops up when you select the earnings flag. Now, this is our earnings AI index. These flags are, of course, optional if you do choose to add those to your VantagePoint software. And again, for education purposes today, keep in mind I'm not a licensed advisor, so I'm not going to be giving you any trading advice here, but simply better understanding how to use technical analysis in your own trade strategy. So, of course, all trade decisions are completely up to you. So here we have that earnings flag. What we'll do is actually look at the information here to see, okay, when is this earnings announcement expected to be displayed? When are we expected to see this earnings announcement come out? And this is before the open. So we would expect the earnings for Roblox that was reported on May 1st to come out before the open. That would mean that May 1st is the day of impact. That's when, kind of all things wild and crazy happens when it comes to earnings, right? So when it comes to earnings, understanding when they're expected to be announced and when they're likely to impact the price movement of that asset is so important. You need to understand what happens prior to, because if you notice, you can see that we actually have a nice bullish move that comes in prior to earnings, right? In fact, anywhere from 7 to 21 days out, we can oftentimes see a nice movement that will happen within a trend. And then of course after as well. So even if you don't like to trade earnings, there's still opportunities around earnings that you can take advantage of. All right. So no matter the market condition, as long as you understand how to navigate through it, you can have confidence to trade in any scenario. So as we see, we then have earnings announced, and guess what? Price goes up. Well, how did VantagePoint forecast that price movement of bullishness, basically price to go up from the previous day based on earnings? That's going to be within our predictive price indicator right here, that neural index that I mentioned earlier. Not only is that a key indicator when it comes to confirming a trend, but it also will help you to navigate through earnings as well. Because if we look, that's before the open, right, on the 1st, we would have needed to look back at our price indicator here prior to that day to see what we expected for earnings to come to fruition. And we were expecting what? Bullishness. Everybody say bullishness because it is green. Okay. So whenever we see green, think up, think bullish, right? So boom, here we have bullish expected. And after earnings, we do have a bullish expectation. Now, this is, this is for everybody. And remember this, please understand this, because after earnings, there is sort of this kind of earnings chaos that ensues after earnings has been announced. And oftentimes there'll be some extreme volatility that happens in the markets. And so you do want to be careful. You do want to be cautious after earnings. I like to call it the earnings grace period. So if you don't like to trade earnings, you may want to wait at least 72 hours after the earnings has been announced for that sort of price to settle back down, all right, for the trend to kind of find its way again, because earnings can cause it to sort of go off path a little bit. And so that earnings grace period will allow it to really find its way. And so once we look about 3 days out, some of you may choose to wait a little bit further. I've heard some traders like to wait about a week out, but typically if you wait at least 72 hours or 3 trade days, then typically we'll see that trend settle back down into its rhythm where we can, utilize that technical analysis again. So we can see here managing that trend from this point that, well, Roblox, the trend remains green, guys. It's really not that difficult. If you see this trend remaining green all the way on up, right? We maintain that bullishness even after earnings. We did have a little bit of volatility that happened right after earnings, a little bit of a pullback, if you will. But pretty soon after that, again, that 3 days, count it 1, 2, and 3 days. Look, our trend then jumps back up into its bullish rhythm here. And we can see that we maintain that all the way on up through even current day, right? So keep in mind the earnings flag, because it's important to know what's happening prior to. That earnings flag is going to show up prior to earnings. In fact, 7 days prior. So in the example of Delta, we can see here that the earnings flag would actually have shown up 7 days prior to the earnings announcement. Now, there are ways, of course, to find earnings plays as well. And that's what really our session is about today is finding when are earnings plays going to happen and how can you take advantage of them, right? Whether it's before earnings and you like that sort of implied volatility rush that occurs, or maybe it's after earnings because you don't want to be involved in that higher risk scenario. Either situation is fine, right? Just make sure you have a strategy around it. Make sure that you are navigating through that scenario as it would relate to your trade strategy. All right. So let's take a look here. This is, again, another great example where we actually have confirmation here with a crossover, right? Our bullish crossover. We were coming out of some consolidation with Delta. Everybody should be able to see that here. But once we have a breakout out of consolidation, we can oftentimes see a really nice move start to occur. And so sometimes the increased volatility that's needed for a breakout can come before earnings. All right. So if you're looking for stronger earnings plays, but maybe you don't like to play the risk of actually staying in over earnings, this is a great way to utilize the natural volatility that occurs prior to earnings. And as long as you're on the right side of that, then those can be some immensely profitable opportunities as well. So let's take a look at Delta here. So as we can see, we had earnings released recently on the 10th here. We can see that earnings flag as well. But prior to that, we did see a bullish crossover. And again, this is anywhere from 21 to 7 days out when we get this confirmation. We had our bullish neural index, our crossover, boom, 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 check, 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 right? That's what we're doing. Checking to make sure that we have confirmation. Once we have that confirmation, we're navigating through that trend. Oh, sorry guys, trying to get my pen here. I keep grabbing the wrong thing. There we go. All right, so once we have that confirmation, we're navigating through until we get to earnings, right? Well, keep in mind, I said earnings was a 2-day predictor of price. So we actually need to look out into the future 2 days. All right, so if here's where our earnings was released on 7/10, where do we need to look back to? Count them, 1, 2, right? Everybody can subtract 2, at least I hope so, right? If not, then well, just count back 2 like I did. The candles will mark your days for you. So here we're looking at 7/8. What was our earnings expectation for 7/8 coming into this earnings? And we can see we had a bullish expectation here from our neural index. So we would expect price to do what? Go up, right? I hope that was a rhetorical question for everybody. You don't necessarily need to type that into the chat unless you want. I'll give you a gimme answer for today. All right. So with a bullish neural index, we would expect price out 2 days, which is when we see earnings, right, to be bullish. And lo and behold, there we go. We have it. We have earnings that was bullish. We can see price jumped way up here. And in fact, the expectation was much greater than anticipated. And when you're on the right side of that, hey, you know what? Who doesn't like to be more right than they already are, right? So that is one way to take advantage of the earnings, whether it's before earnings, and maybe you exited out prior to that, right? Maybe you took a little bit of profit here and left maybe a portion of the position on. So from crossover to crossover here, even just prior to earnings, right? You do have a calculation of about almost 6% in 10 days, right? So that's definitely not too bad. If you took that all the way up to earnings, then, oops, let's grab that profit calc again. There we go. You've got about 17.13% using the neural index and the earnings flag together. All right. If you take a look here, you can even see the accuracy of VantagePoint on each of the earnings based on that neural index reading as well. So how do we find these opportunities? Now that you know how to use the indicators, right? That's the important piece, but the really fun piece is being able to find these different types of opportunities. Now, before we get into the scanning tool, which can help you find these really great opportunities, whether you're looking for that implied volatility rush prior to, or maybe even the trend to resume itself after, or maybe you want an earnings play. We can look at all 3 scenarios. Do we have any questions on earnings today? Hey, Chad, yeah, absolutely. Not a problem. Just make sure you give us a call and we'll help you out with that. Oh, Rick. Okay, so you and I are on the same page. I like it. Okay, so Rick likes to wait for the volatility to sort of settle before looking at the moving trend after. And that's what we were just referencing is, okay, now that we're 3 days out from earnings, right, is this trend sort of resuming its normal trajectory? And from all things predicted in Vantage Point, we can see that we actually are sort of resuming our normal trend here as well. So it's really important to understand that, yes, earnings can be high volatility, but there are less risky moves before and after, as long as you know how to navigate through the earnings and through the earnings season, because major earnings plays can also shift the markets dramatically as well. So we have a couple of key earnings announcements coming up here in the very near future that we do need to be on the lookout for, because major markets can shift the sentiment as well. So let's open up IntelliScan. I'm going to go ahead and just pop open our stock screener, which we call IntelliScan. And so whenever you hear us reference IntelliScan, it's really screening for new types of opportunities. We can look for things like options, all sorts of different strategies and techniques that we can look for ideal types of opportunities for traders. But most importantly, we can create a custom scan. If, for example, opportunities that you want to look for involve earnings, then we would simply just come on over and grab from our indicator panel drop down. We could in fact add our earnings indicators. So let's add that earnings flag. That'll tell us when those markets are expected to release earnings. So we have days before, we have days after. We can even look at the estimate. What is the expected estimate of earnings? And then for those earnings that have already been released, we can see the surprise percentage and when those earnings are expected to be announced. All right, so moving on to our next indicator that we're going to pull into our IntelliScan is the Earnings AI Index. Now, remember, I referenced the fact that Vantage Point will actually give you the accuracy for each individual asset on its predictions and forecast for earnings. Basically, how well does Vantage Point do at calling the earnings? All right, how accurate is Vantage Point at calling the earnings play for the individual asset? Because some assets are more volatile than others. And so that's what our Earnings AI Index will show you. So quite simply, what we're going to do is just drag and drop all of our US stocks right into that IntelliScan. So that IntelliScan or stock screener is a great way to scan for earnings plays. So for those of you who are wondering how to screen and scan for earnings plays, one, understand when earnings are expected to be announced. So let's do that first. I'm going to add all of our US stocks right into our system here. Hey, Rick, that's a good point. You know, some traders don't always hold through earnings. Some will get out and wait for the earnings play to finish and then resume if the trend is expected to continue. And understanding yourself as a trader is a key component there. You have to understand what your individual trade strategy is so you can navigate through that with confidence. If you're second guessing yourself, you're second guessing the trade. And don't do that, right? Have confidence. And if you don't, then maybe you need some predictive forecasts that can help you with that. So go to VantagePointForecast.com and we can certainly get you some more information on that. And if you're already a Vantage Point family member, well, great. Take this information and use this scan to your advantage. If you're not, make sure you understand when earnings are being announced. You can look this up online. This is just a really great, easy way to look for earnings. So if we're looking for an earnings play prior to the earnings announcement, well, here is where we can look for days prior to earnings. All right. So maybe we want to look for something that's within the next, 21 days. So we'll set this to be less than or within, right, the next 21 days. It's really that simple. So we have quite a few opportunities, 943 to be exact, that would basically qualify for this type of opportunity where we're looking for days before earnings. Now, that's just one filter that we can use. Now, let's couple that earnings data, right, with the accuracy as well. So now we're going to take our earnings accuracy percentage, or AI earnings index, if you will, and let's set that to be better than. Maybe we'll set that at greater than or equal to, I don't know, let's say 85%, right? Anybody want to be 85% accurate on the earnings play? Do you think that would give you a bit more confidence there? Well, artificial intelligence is much more intelligent than even I am, right? And so I like to leave those forecasts up to the software. And with 85% accuracy coming from the neural networks and the artificial intelligence, that neural index, you can have a lot of confidence. Maybe 85 is not enough for you. Maybe you want 90. And you can still see we have 85 different potential opportunities within the next 21 days that have an accuracy percentage of 90% or better. That's incredibly powerful, guys. I don't know how else to say it, right? So now we can couple that with the predictive data as well. Because if you remember those crossovers, remember we're looking for a bullish crossover to be confirmed with our neural index and our predictive differences as well. So why not just look for those in the IntelliScan? Well, guess what? Bullish is up or green, right? So we can do all of that right here in the scan. We can look for our crossovers to be up as well. So I'm just going to go ahead and put in our short term and our medium term crossover. Now, keep in mind, the software can be customized to the individual trader as well. So there are several different time frames you can utilize on their own or together to help you better strategize around your earnings opportunity. But if you're looking for a crossover to the upside with confirmed neural index as well, right? Because that's going to be important. And then, of course, our predictive differences going up. Now, keep in mind, this is 21 days out. Oops, helps if you put the right letter in there. And looking for those earnings plays prior to earnings, right? Then this is where we can start to really get down to some really potentially valuable opportunities that have that sort of natural implied volatility coming in prior to earnings as well. Let me just take a look at the chat here. All right. Perfect. Oh, welcome, Safi. Glad to have you. Thanks so much. All right, great. So keep those questions coming, guys. Looks like I covered most of those already, but if there's something I haven't, just go ahead and type it back in the chat so I can see it again. Sometimes it's hard to go back through previously. So we can see we can even open up some of these opportunities as well. So let's open up Insight, INCY. Now, the stock screener is also great because you can even add in things like volume. Maybe you want highly liquid assets. So let's add in volume here as well. Oops, I added volume to the chart. Sorry, guys, you can do it to both. I want to add that to the IntelliScan. See, the indicators you use on the chart are going to be the same indicators you use in the IntelliScan, just a way to sort and filter and find those really unique and great opportunities based on your trade strategy and style. So we've added volume to our scan as well. Oops, there we go. There, right on the end. So maybe you're looking for highly liquid assets, and that might be greater than or equal to $1 million or more. Maybe that's greater than or equal to 500,000. That's going to be ultimately up to you as the trader. Typically, you know, nice liquidity starts around $1 million. So let's just use that as an example of a baseline today. So we'll just type in our 1 million marker here for volume. And from here, now we can see we have 6 potential assets. Now, Insight is still one of them, so I have that pulled up here. Let's take a look at that Insight chart. I'm just going to minimize our scan here, push it to the background so we can focus on the chart area. We can see that we've got some consolidation happening here. That's okay, that happens, but what happens after consolidation? We typically will see some sort of breakout. Could earnings be the event that causes that breakout? Could earnings be that essentially that event that sort of catalysts this trend into a new trajectory? And that's really what you're looking for when it comes to that implied volatility rush or even crush that happens after or prior to earnings. All right, so we do have earnings coming up. Let's see when earnings is coming up. So insight, that's 14 days out. So our flag isn't showing up quite yet. Why? Because the flag will show up 7 days prior. That will be an indicator for you in the software when that flag shows up that says, oh, earnings is coming up within 7 days. It's time to start making some decisions here on whether you plan to trade this earnings opportunity or whether you want to get out prior to. It'll gives you some leeway and some time to adjust your strategy based on your preferences around earnings. All right, so here we have 14 days. Here we have one that's 7 days. Let's take a look at RTX. So if we take a look at RTX, we can see our implied volatility has already really started to trend into this asset. We have earnings coming out on July 22nd. We have a positive PE ratio estimated for RTX. That estimate is at 1.45. That's your PE ratio, guys. All right. So with a positive estimate, that means company expectation is fairly good. Now, we would have to wait for the actual data to come out on the 22nd. That's going to be before the open. So we'd want to look at the neural index 2 days before the 22nd. So that would leave us, I think, Friday, right? On a Friday, because I think the 22nd is on a Tuesday. So we'd look at the neural index that Friday to anticipate the trend out those 2 trade days. But look at that earnings AI index is 96% accurate. You can also look back to see what happened the last earnings periods. And we can see after earnings, we had a really nice move to the upside here. And then we can also see that, oh, I'm sorry, here, let me see. When did we, I'm sorry, that was before the open. So yes, we did have actually a jump down after earnings was released. So that price action was correct. We'd look back 2 days, right? That 2 days is red. So our earnings impact is negative. So on the 22nd of April, we would expect price to go down based on earnings. Why? Because the neural index is red. And look what happens on the 22nd. That's because it was before the open. So on the 22nd, price fell after earnings was announced. All right. Now remember, I said there was some earnings chaos that happens after earnings, right? So you have to be prepared for that. All right. You have to be prepared for the impact that occurs afterwards. This is why you want to let sort of volatility settle and the trend find its way after. But then after that, again, we can shift into another trend. So earnings can be the catalyst for some great opportunities, especially if we drop like what we did here on the 22nd. Expecting that bearish movement 2 days prior would tell you that if you're in a bullish trend, you may want to take some profits at that point because you don't want to stay in through that bearish expectation here. Again, guys, look, I can't make it any more clear. The neural index is red, right? Right here, that 2 days prior, giving you a 2-day heads up to what happens here, right? So if you want to know when things like that are going to happen ahead of time, well, there you have it, Vantage Point, right? So 1, we needed to know when, and 2, what's the likely impact? All right. So looking back for here, we can see, again, looking back 2 days, expectation was bullish, and on earnings, we actually have price going up that next day compared to the previous day. So price going up that next day, which is why we have such a high accuracy at forecasting earnings here. All right, so let me ask for some ticker symbols now. I like to leave the last half here for us to really dive into any ticker symbols that you guys want to get into. So let me know here in the chat. I'm just checking through that. Just grab. All right, I saw some earlier, so give me 1 sec, guys. I'm just grabbing some here. All right, perfect. So thank you for those. We'll look at 3M. No problem. We've also got Netflix, right? We can go into back into the scan as well, but I want to make sure we have enough time to go through the ticker symbols that you guys have requested as well. So starting with 3M, that was the first one that I got. Oh man, 3M. Wow, look at that rush of implied volatility that we had coming in here. All right. So this is a prime example. These are ones that you guys have requested here now. So this is a perfect example of where volatility coming up through earnings can really generate some nice trends within the market, some very profitable trends within the market. So of course, with anything here in Vantage Point, we do want to make sure we have confirmation. Boom, boom, boom. Check it. Done. Bullish, bullish, bullish across the board. So we have nice bullish confirmation here. What does that tell us about the trend expectation? Everybody say up with me, right? And then as we can see coming into earnings, now earnings is released on the 18th. Notice that little 18 right there, and that's our earnings flag. So I'm just going to drag this all the way up to current day and where we're at, or at least yesterday, right? And then we can go ahead and hit that profit calc. So taking advantage of that move prior to earnings, we can actually see that July 18th coming up as well. So let's come back and I'm sorry, I didn't mean to scroll over the scan here, but let's move this on over so we can see where that trend began. And with earnings coming up within the next 21 days, we can already see that sort of earnings strategy starting to take shape here with that expected implied volatility rush. Now, again, we're coming out of this bearish trend. So this could be the catalyst that is shifting that market trend with upcoming earnings, right? So let's take a look and see what the estimate is expected to be. And we actually do have a positive earnings estimate. So with a positive earnings estimate coming from the analyst, as well as, positive sentiment in the markets right now, couple that with your predictive data, we can find some really, really powerful, really profitable trends here within the market for nice expected moves. So that, thank you for bringing that to the table today. Appreciate that. So let's jump back into the scan here for a second, because it's also important to understand. Now, the reason this one didn't show up in the scan, guys, I had a couple of questions on that, is because it's at 77%. Now, keep in mind, we were being very particular, very picky, if you will. And when you have so many great opportunities in the market, just sort of at your fingertips in the IntelliScan, you can afford to be a little bit pickier. But if you were to jump that back to like a 75 on your earnings index percentage, which is still incredibly powerful, right? 75% of the time, then 3M would have shown up here in our results. And so that would have been within the next couple of days. And we can see that our earnings percentage is 77% here. Okay, so coming back to our IntelliScan, and if you are not worried about the earnings AI index, you're looking for, plays prior to or after earnings, then you can just remove that earnings AI index and look for your 4 points of confirmation for the trend and some additional, volume and volatility coming on into that market. You could also look for increasing volume as well by adding your volume percent average as well. So is volume above average or below average? And so keeping to our earnings for today, we can also look for days after. So for those of you, and I had a couple of you in the chat, don't worry, I didn't forget about those who maybe don't like to trade earnings. When you see earnings coming up, you're protecting yourself. You might be getting out, you might be taking profits, waiting for that earnings to pass, waiting for that sort of earnings grace period to let the volatility settle prior to considering the trend again. And so if that is you, that's okay. Just look for days after earnings. We can either sort that from least to greatest, or we can say, give me something that's after earnings by at least 3 days, or maybe 5 days here, right? So we can look for assets that have recently passed their earnings period. And so, Kroger 25 days out, we can see that, nano nuclear energy 26 days out. So we can see very quickly what opportunities might lend itself to your trade strategies and your trade protocols. So let's jump back on in. We talked about 3M. I hadn't had a chance to get to Netflix here, but wanted to go over the scan for any of you who are looking for opportunities that maybe have passed earnings recently. So here we have Netflix. Netflix, we can see earnings is coming out in July the 17th, right? So if I close out of that, you can see the earnings flag here is denoting July 17th. So, well, if we look at Netflix, right, volatility can work both ways. So it can work bullishly or bearishly. And that's why being on the right side of that volatility is so important. All right. So if we take a look even at sort of our shorter term expectation here, that shorter term trend expectation, we can see we have a shift in Netflix to the downside. And of course, Netflix has been at some all-time highs here recently. And so coming into earnings, are traders starting to maybe take some profits off the table here? Well, if that's the case, we know that really does lend itself to some increased volatility, but the direction is key. Volatility is not bullish or bearish either way, but you needed the directional component to help guide you through that. So let's take a look at our crossovers here. You guys can see we have a crossover to the downside, or bearish if you will, because our trend turns red. That blue line crosses below the black line. Then we have that red neural index. Then we have our predictive differences all trending down. So with confirmation like this telling you that this trend is not expected to last much longer, again, coming into earnings can give you some great opportunities to either, one, take profits if you're bullish. And, again, that's completely up to you. I'm not telling you what to do here, but just as an example, if you see things shifting, a trend shifting significantly against you, you may want to think about taking profits or, setting some sort of risk mitigation tactic in place. All right. So if that occurs and we shift to the downside, then maybe you like to trade options. Maybe you want to short this market. There's great opportunities no matter what way the market is moving, as long as it's moving. And prior to earnings, we'll see that market movement sometimes happen quite a bit because of that natural volatility that comes in. And so when we see that shift to the downside, great opportunity for anyone who likes to short the market, or again, profit-taking opportunity for those of you who do not. And then, of course, as we come into earnings, coming from July 17th. Now, this is after market close. So we would actually be looking at the neural index for tomorrow's trade day, but we can see it is currently bullish. If it remains bullish, then we would have a potential expectation. Now, let's take a look at the percentage. We're 86% accurate on Netflix. Keep in mind that, of course, earnings is high risk, high reward. So when it comes to earnings, you have to be cautious and understand the risk that you're getting into. And that comes with any sort of fundamental play, because that's what earnings is. It's a fundamental play that we can use technical analysis to help navigate through. All right, so that's important to understand. Now, are there any other ticker symbols? Go ahead and put those in again for me. I saw some earlier. I'm sorry, Netflix and 3M were the ones that I saw first. Oh, okay, perfect. Thank you. I just found them in the chat. Sometimes it takes me a moment, guys. So that's the beauty of doing this live, right? Was it BT? BT. Okay, good. I got that one right. Thank you, Michael. UAL. I'll try to grab some from everybody here, right? I love it. You see earnings as a whole in the sidewalk. So you might want to hop over that, right? Or avoid it. Yes, Esteban, absolutely. I just saw that too, so thank you. Perfection. Oh, I'm sorry. I typed that in incorrectly. I'm sorry. PNC, right? Okay. Excellent. Let's go ahead and get these pulled up here. So PNC. All right. Wow. All right. So, oh man, I'm just amazed by Vantage Point every single time. So again, even if we back this trend out a little bit, right, we can see that we had a nice bullish move, but Vantage Point can also help you avoid some sideways movements, or even help you find those movements if you like sort of delta neutral strategies. Can I get like a hand raise or a me in the chat if you like delta neutral strategies, if you're looking for markets that are in consolidation? Because I want to know what type of trader we have out there. Everyone's a little bit different. So tell me who you are as a trader. What are sort of your ideal types of trends? That would be helpful for me during our session so we can make sure we're bringing you the best of the best education for what you guys are looking to hear. So let me know in the chat if you can. But you can find these types of opportunities or avoid these types of opportunities similar to earnings, right? Whether you want to find them or avoid them, it's important to know that there is some consolidation here. Look at your strength indicators all through here. Right? We really don't have a whole lot happening here. Everything's sort of sideways, no good strength one direction or the other. It's just kind of toggling sideways, if you will, back and forth. Now, it's not until we actually get this nice crossover here recently within sort of that earnings time frame. Again, this is why I say it starts 21 days out. So if you're not looking to see what plays there are prior to earnings season, you may be missing out on a lot of really, really good profitable opportunities. I can't stress that enough. And these charts are the ones you guys asked for. So if you notice, we've got a crossover here and we've got our bullish neural index. We've got all three of our predictive differences trending up as well. So we saw a really good opportunity potential here for a bullish trend coming into PNC prior to earnings. Now, whether you want to stay for earnings is completely up to you, but I promise some really, good ways to find potential opportunities prior to earnings, during earnings, and after earnings. So this is one way to do that, where we're looking out prior to earnings. We've got that earnings report coming out on the 16th, right? So that's tomorrow. Let's look at our market. So let's look at it before the open. So we'd be looking back 2 days prior, count it 2 days prior, and we'd be looking at a green potential neural index here as well. The earnings estimate is 3.56. So we have some bullish expectation for our earnings play. We do have a 91% accuracy, but again, as always, earnings is a high risk, high reward strategy. So make sure that you are accounting for that increased risk within your own trade plan. All right. Now, of course, if you wanted to take advantage of that natural implied volatility that happens prior to, we can see that trend occurring. Let's just take a look and see what we've got there. So even on the safer side, more conservative trading prior to earnings, you've got over 11.5% here in just 15 days. Not too bad of a move, that's for sure. Being a little bit sarcastic because, anybody who's looking for nice big moves in the market would say, 11.5%, that's a decent profit, right? You can see based on the number of shares here, or if you wanted to adjust that too, this is our profit calc tool. So you can quickly look at the potential for a trend or trend line, if you will, and evaluate position. So even on 100 shares, maybe one options contract, you've got about $2,000 in profit, less premium, of course, if you are trading the options, or potential profit here, to, give or take, depending upon where you got out hypothetically in that scenario. All right. So again, that's just using the crossover and the movement and the anticipation of earnings coming up. So that's what we're seeing here. Here's your earnings estimate. Here is your time of day, and of course the earnings index percentage, so we can see exactly what the accuracy is on forecasting that movement. So let's move on to the next one. I'm going to call it a magic dragon from here on out. Forget iron condor and broken wing butterflies. It is now a magic dragon. Thank you, Rick. And I will absolutely give credit where credit is due. Okay. So I love it. All right. So for you options traders, you probably understand that joke. If you don't, well, attend one of our options sessions and we'll dive a little deeper into that. Okay, so let's talk about UAL, which is United Continental Holdings. So for our trend here, we can see we had full confirmation actually here. We had a little bit of a pullback, but our trend pretty much so resumes its normal trend very quickly after that. And so keep in mind that this crossover here, this medium term crossover that we're on, looks out 2 days into the future. So it's okay with a little bobble here the next day, but we want to know, are we expected to move up then and continue bullish over the next 2 days? And we do see that happening pretty quickly. If not, it would have corrected itself and switched over to the downside so you could minimize losses. In this case, AI is navigating through that trend better than any human could, because it says, well, we're looking out 2 days. We're not looking at just what happened. We're looking at what's expected to happen so you can make proactive trade decisions. All right. And so, of course, navigating through that, maybe you waited. If that's the case, then you're waiting for that additional confirmation here. And that's okay. That's not a bad entry point either. Depending upon your trade strategy, obviously it's going to be up to the individual. But navigating through that volatility here, coming through, we can see that trend remains bullish the entire time. It's really that simple. Follow the predictive indicators. They will kind of light the way of the path for that trend expectation. Now, again, we do have earnings coming out after market close on the 16th. That's going to be tomorrow. So we'd be looking at that neural index update today to plan the trade day out. So once the software updates, you'd be looking at that neural index to anticipate that move. So we do see some bearishness here already. If it would confirm that bearishness again tomorrow, then we would definitely, of course, when the software updates tonight, it's going to forecast for tomorrow. And since this is after market close, the impact would be on the 17th. So we want to look that 2 days prior. And so the neural index would then give us that reading for the anticipation of earnings, whether or not it's expected to go up or go down. And so we have that accuracy percentage at 82%. And we can see on some of the other assets we looked at, when your accuracy is that high and you have the neural index to help guide you through that earnings play, it can either give you confidence, or just knowing that it's coming up on the 16th and you need to make a decision by tomorrow can be everything that you need to accurately plan your trade for your trade strategy. So let's take a look. I know I'm working backwards here. Let's go to BTB. All right, so when do we have earnings coming out on BTB? One thing that you can also do in the IntelliScan is maybe you have a portfolio of assets that you trade, and so you want to know when those earnings are coming up. Maybe you have active positions already. So one way to check those, I'm just going to remove our stocks out of the IntelliScan, right? And we're going to clear our filters. It's really that easy to reset the IntelliScan, guys. And we could add one individual asset into this scan. So let's add BTB into the scan. I'm just going to add to IntelliScan right from the chart itself, just a simple right click. All right, and we can see that we're actually 34 days prior to earnings. So we have a little bit of time here. All right, so we'd be looking for some potential movement coming from that earnings play within, the next week or two. But we can see this trend is actually already started. We can see some increased weakness happening here. In fact, if you switch over to that short-term crossover, so this wouldn't necessarily be an earnings play just yet. So I can't remember who gave this in the chat, but thank you for this, because you don't have to wait for earnings. You can use the software, use these tools, use this predictive analysis to identify trends early on as well. So we can see we have a nice move to the upside, or expected trend shift happening here on the 1st with that confirmed neural index, with strength again confirming as well. And we can see this nice trend then ensues right there until we get the crossover to the downside here, with again confirmation telling you may want to exit out if you are at profit at that point, or if you're getting a little risky. At least if nothing else, manage that risk, right? So looking at that short-term crossover, I meant to grab the profit calc here, and we can go even just from crossover to crossover. Let's go that next day to here, right? Just again, give or take, depending upon where your entry or exit was. But that is a 55.89% move in 8 days. Now, it's a fairly low priced asset. So, 500 shares might not be, too much. You might be able to do more. Or for those of you who maybe are working with smaller accounts, that's okay too. We can find different assets. Not everything has to be, $2, $3, $4, $5, $1,500 per share. You can find lower price assets, or if you trade options, you can leverage and do more with less using the options. Key being you understand the direction and the timing of the market here, and you understand when earnings is coming up also, so you can anticipate those moves. And whether you're trading options or trading the stock outright, you need to know the direction and you need to know the timing. That's the key to the strategies. So regardless of what it is, even if it is like a, scary dragon, I can't remember what you said, Rick, but, just make sure you understand where those market movements are happening. All right. So let's take a look. Let me see. All right. So there were some questions on, Franklin, you must be a VantagePoint user already. I can tell. All right, look at you in your knowledge here, throwing in EMAI. So because you asked for it, I will show it. Was this the market you wanted to look at EMAI on? Because we can certainly do that. I'll go ahead and pull that up. For those of you who don't know, electronic market accumulation index is a mouthful, so I like to kind of consider that EMAI. I'm just going to back that out to a 6-month view. And we can see here where institutions are either buying or selling, basically. It's accumulation or distribution of the asset by the major institutions. And so when we have institutions buying in, right, that can help us to anticipate a larger bullish movement. All right, now when does that actually take place? You can even pair this up really with like a medium-term crossover here to look for stronger confirmation. And so when we have the institutions buying or accumulating this asset, that does set us up for some really nice bullish conditions in the upcoming market trend. And so when does that upcoming market trend take place? Well, we can see here. So if you've ever wanted to sort of catch the wave of the big institutions, right? If you find yourself wondering, like, how do I catch these larger trends? How are these traders finding these massive trends? Well, oftentimes it's by understanding what the institutions are doing as well and pairing that up with the proper timing. So here we have institutional movement, or that big wave coming in from those big market movers, and then timing that with the proper indicators and technical analysis, looking for those predictive indicators to be in alignment as well as the institutional movement. And we can see we have larger trends accumulating here as well. Boom. And then, of course, pairing that up with the predictive indicators also. So that's one way to also use that predictive data. Now, we can see here, again, with our major sort of shift in a trend. I was going to call it a major meltdown, but call that what you will. But you can see that we had institutional selling actually starting back here, right? That's not to keep you scared out of the market, but we're looking at that expectation moving forward. We're seeing that movement to the downside as well as that crossover that's already happening. We can see that institutional movement sort of selling off as well. So are institutions taking profit at this point? Certainly looks like they're distributing that asset or selling out, if you will. So a great way to better understand what those big players in the markets are doing, especially after or around earnings as well, because that can also help you better understand the future potential of the trend. In this case here, you can see that we had earnings and then institutions still buying in this accumulation phase, and our trend continuation happens here really all the way up until this point, and we continue in that bullish trend. So finding these larger moves can also be incredibly helpful to understand what those institutional movements are occurring behind the scenes as well. And that's what the electronic market accumulation does for you. That's a Larry Williams indicator, also, optional here in VantagePoint, but lots of fantastic, incredibly valuable tools here that we've gone over today as it relates to earnings and just making sure you're on the right side of the trend. So, whether or not you trade earnings, you like to avoid earnings like, a crack in the sidewalk, that's okay. Find the trend that's going to work for you. Find the trend that's going to give you the most confidence to be profitable and successful in the markets. And so again, whether you're using Vantage Point or not, you can certainly benefit from understanding when earnings are coming, that natural volatility that occurs before and after, and maybe how to avoid that volatility if you are a lower risk trader in the market. So I hope everybody enjoyed the session for today. It's always such a pleasure to have you guys join in and join the chat and just communicate with you guys to see what you guys want to cover in the session. So I appreciate your engagement and your feedback today as we did, took a deep dive on some of these ticker symbols and this live market analysis. So looking forward to our next session. I will see you then. Have a great day, everybody.